Hey everyone, I am back with a really exciting video about dividend growth investing. Today's video, it is really important and I want everyone to stick around for this entire video because this is going to address a bunch of topics that I have been facing recently with this channel. It is a channel update, but I also have an update on some of my holdings and my perspectives on the stock market as well. So there's something for everyone in this video, but get ready for a really big channel update. So I want to start off with some really good news. As you all know, I own stock in General Mills. This is a company that I started buying in 2018, and I have bought this stock all over the map between $42 and $47 I've averaged in, and recently the stock has plummeted. And it has plummeted really with a lot of other stocks in the market. The market is starting to correct. Maybe it's even a crash. In fact, if you've been watching my channel for a while, I will link in the description below. I did a video 3 months ago that talked about how I thought the market was going to crash. Perhaps this is not a crash, but perhaps it is. I certainly think that the market is going to be facing some downward pressure going forward. Anyways, General Mills has trended down, and I just bought some more in the 38 range at $38.62. So I'm excited about that. By the way, for people who have been around since the early days here, I'm back with the Stanford notebook. I got my notebook back for today's video. Just thought I would take some notes to make sure I get through everything and save myself some time not having to prepare the whiteboard today. Anyways, I'm really excited about General Mills. It is 0.6% of my portfolio, so it's a really small position. I'm trying to build it up to around 0.9% or 1%. Now, the reason I'm sharing this again is someone even wrote in the comments, Ian, you talk about General Mills a lot. It sounds like this is a core holding of yours. No, I want to set the record straight. This is not a core holding. I talk about it a lot because I first purchased this dividend stock in 2018, but literally it is only 0.6%, meaning it is less than 1% of my overall dividend stock portfolio. So it's really small. And even when it gets to its full size, about 1%, I'm going to cap it there. That's going to be it. So this is going to be a smaller position for me, but I like talking about it, and I think it's a really fun and cool company. They just announced earnings in General Mills. They did really well. Actually, the stock was up about 6% in a single day. This is a day when the rest of the market was doing really poorly, really bad day for the market. And their earnings per share came in at 85 cents versus 82 cents last year. So earnings per share are up year over year. That is a great signal. They beat the analyst expectations. They were expecting, I think, 81 cents. So analysts were actually expecting them to slightly shrink year over year, and they exhibited some great growth. And so nice to see them turning the corner there. Certainly just one quarter. This was their fiscal Q2. We'll have to see if this track record continues. It will be important to see how the trends go over the next few quarters for General Mills. Revenue was pretty good too. Revenue was also up year over year. It was $4.41 billion versus $4.2 billion last year. Revenue grew nicely year over year, although the analysts were expecting even more revenue growth than they saw. So they actually beat on earnings per share, but did not beat on revenue. That said, it's nice to see both growing year over year, and that's why the stock was up 6% in a single day. Now that is just some fun news to start the video today, but what I want to get into next is another topic. So Topic 1, General Mills, some cool news. Topic 2, though, as I had discussed about 3 months ago in my video, I believe that the market is going to face some turbulent times ahead. And I really think this is an important video for everyone watching because I want everyone at home to ask themselves, do I want to be an investor now? Do I want to invest in this market? Am I comfortable with the risk? Because more now than ever before, in my opinion, there is some risk in the market. It's starting to trend down. I think there are some macroeconomic factors that are not going to help. I think one of them is the enormous amount of debt that a lot of companies have, including some of the companies I own, coupled with rising interest rates. So interest rates are, they're going up kind of slowly, but they're starting to go up. And so those two factors affect a lot of companies, and also just rising interest rates in general tend to slow down the economy. Higher interest rates, less people taking loans, less growth, fewer new jobs. And so it all starts kind of painting a picture. Personally, I believe this long bull market, this long economic recovery, it's finally coming to an end. And so a question that I always ask myself is, Ian, are you comfortable losing 50% of your portfolio in terms of portfolio value? If a few months from now, your portfolio, Ian, were worth 50% of what it is now, would you be okay? My answer is a resounding yes. I have no problem with the risk. I actually, quite frankly, seek the risk. I don't mind the risk. That being said, I realize a lot of people out there, they're not like me. A lot of people are risk averse, and I start seeing this in the comments. I've seen this in the comments on my channel. People starting to get nervous, and they're like, hey, Ian, I bought General Mills. I bought it, but now I'm feeling uncomfortable. I'm feeling like, should I really have bought it? I regret it. And so the fact of the matter here, I think for everyone, myself included, it's always good to ask the question, do I want to be an investor in this market? Do I want to be an investor? And it's okay. My answer is a resounding yes. And I'll get to why in a minute. But for a lot of people, they just cannot stomach losing money on paper in the short run in terms of stock prices going down. It really affects them. And so this is a risky market. Investing in stocks carries risk. I believe investing in dividend stocks typically carries a little bit less risk, but it is a risky event. And so this is just something people need to ask themselves, because the last thing that an investor wants to do is be up at night, be worrying, not feeling good about their portfolio, not feeling good about what they're doing. And there are certain people out there, maybe it does make more sense that for them to be a saver rather than an investor. The reason, though, I am comfortable losing 50% of my money, hypothetically, if the market crashed, or even more potentially, is because I invest for dividends. I plan to never sell. I do not intend to sell my stocks. And so when stock prices go down, I like to average down. I like to get higher starting dividend yields, because the lower the price, the more yield I'm getting on my dollars deployed. And so another thing that sets me aside in this market from a lot of people out there, quite frankly, who are just getting started, is I've been at this a long time. So I want to share a few examples. First one is Johnson & Johnson. I started buying this stock in a major way in 2011. And my purchase price that I started buying at in 2011 is $58 a share. It's now at $128. I'm up 121%, not even counting the dividends, just on the stock price alone. And so I have built-in gains in my portfolio, whereas if Johnson & Johnson, it already has tanked a bit, but if it really tanks again, it just doesn't concern me, because I've been in it long enough. I have that built-in cost basis, which somewhat sets me in a unique position, because I am not starting now. I have some built-in gains. Worth noting, Johnson & Johnson has raised their dividend for the last 56 years. And so this is really important to factor in. Over the last 56 years, there have been many economic cycles. There have been many downturns. There have been many economic issues. That being said, Johnson & Johnson has been faithful to their shareholders. They have raised the dividend for 56 consecutive years. And so a lot of people start asking me on my channel, Ian, are you concerned about the falling market? Because all these stocks that you own, not only are you going to lose money by the stock prices dropping, which, like I just said, I don't care, but they also say they're also going to cut the dividends, so you're really going to lose everything. And my theory on all of this is, out of the 39 stocks I own, if things get really bad, let's say market collapses, economy collapses, everything's down 50%, let's say everything's down 70%. In that case, out of my 39 stocks, maybe a handful of them will cut their dividend. But my belief, and I may be wrong, is that the majority of them will continue to pay a dividend, and a lot of them will continue to raise the dividend, or at least hold it steady. And the evidence is right here in the history, the historical trends of Johnson & Johnson. I want to take another example, Home Depot. Started buying Home Depot in 2014, started buying it at $74 a share. It's now at $160. And so I'm up 115% on capital appreciation alone from when I first started buying Home Depot in my first tranche. Obviously, I've been buying since then all the way up, as I have been with J&J. but I have built-in gains, and so I'm a little bit different. Now, they've been increasing their dividend for the last 9 years. They did pause their dividend increases during the Great Recession, but they resumed them right after. And so Home Depot is another example. Even if the economy tanks, yeah, maybe they'll pause their dividend increases, but I don't think they're going to cut the dividend, at least based on the historic data that I have. Another example, Clorox. First started buying Clorox in a major way in 2011. This was one of my favorite stocks. I love Clorox. By the way, I'm going to link in the description below to my J&J videos, to my Clorox video. I love these stocks. I have yet to do a Home Depot video. I'll do that at some point. But Clorox, I started buying at $68 a share. It's now at $154.51. I'm up 127%. Does not include the dividends even being reinvested or the dividends I've received. And so that is just the magic of being in this and having a lower cost basis. Now, Clorox, they have raised the dividend now for 40 consecutive years. 40 years. And so again, like J&J, they have been through a lot of economic cycles, a lot of them. And even if the economy collapses here, even if there's a crash, look, I said I thought there would be a crash. I said this 3 months ago. It seems like it might be starting to come to fruition. If that happens, I don't think Clorox is going to cut the dividend. I may be wrong, but that is why I am so excited, quite frankly, about a dropping market, because it finally gives me an opportunity to pick up shares progressively cheaper. It's going to be tough on the ego. It's going to be really challenging on the ego to see the market value my portfolio drop, but that's not why I invest. I don't invest for market value of my portfolio. I invest for a growing stream of dividends. And like I said, I own 39 stocks, widely diversified. Even if there are fundamental issues that hit certain companies, I can weather that because I have a portfolio of 39 stocks, and quite frankly, it's going to grow a bit here. Probably add another new position, net new position in 2018, perhaps. And I just added a new one recently with my purchase of Apple. And so the point I'm trying to make here is an illustration of risk. Here's another way of looking at it. Let's say I had all the money that's in my portfolio now, but I just had it in cash. And let's say I didn't have these built-in gains. Let's say I was just starting over. Personally, I would probably approach things a little bit uniquely. What I would do, hypothetically speaking, rather than put all my money right back in the market right now, is I would average in. And I'll link in the description below. I just did a video on this. I would dollar cost average in, meaning I would deploy small amounts of money over time into the stocks so that after maybe, say, 5 to 7 years, I would be fully invested. But right now, I already have the liberty of being fully invested. I have the liberty that I've been in this a long time. And so the money that I have to invest each month, I'm deploying it in, I'm averaging in, but the money I deploy each month, it's typically smaller as compared to the overall pie of my stock portfolio. So the summary here of this section of today's YouTube channel update is stock market investing carries great risk. I want to actually remind people of my disclaimer here because I'm so careful in every video, in the description, and also in the video itself to share with everyone that I'm not a licensed investment advisor. My videos are not investment advice. They're literally just for fun and entertainment. I'm sharing my personal journey for fun and entertainment on YouTube, and that anyone who may be considering investing, making investing decisions, should consult a licensed financial advisor first. I want to reiterate that because I see it in the comments. I see people starting to get disappointed. I see people starting to get fearful. Hey, the market is dropping. Hey, I've lost some money on paper. Go home, ask yourself the question, sleep on it. Hey, do I want to be a dividend investor? Hey, can I stomach it if I lose half of the money that goes into the market? And I have to live with that. Can I live with that? Can I not live with that? For me, I've been through it enough. I've been investing for over 20 years. I have no problem with the risk, but I may be different than a lot of other people out there. And again, there's no one right or wrong answer. Everyone needs to find the answer that works for them. At the end of the day, it's all about sleeping at night and enjoying life. So why would anyone want to do something to take on unnecessary risk that would disrupt their sleep schedule or their happiness in life? And so it's really important as part of this channel update because now the market is starting to show volatility. I just want people to be eyes wide open as it pertains to markets and to risk. And stock market investing carries great risk, as I have been sharing through my videos throughout the last year plus here on YouTube. So I want to move on to another channel update. This is going to potentially throw some people off here, and there's really a few reasons behind this update. So Patreon. I recently shared with everyone that I created a Patreon account. I'll cut right to it. I have decided to close down what I'm doing on Patreon. I have decided, first and foremost, I want to sincerely thank the people who stepped up. I think there are about 14, 15 of you who stepped up on Patreon and pledged to support my channel. There has been no money transacted yet on Patreon, but I have some pledges. I'm going to cancel the account, and so no one will be transacting any money my way. Now, the reason that I have had a change of heart on Patreon is twofold. First and foremost, I take feedback from this channel and the community very seriously. And look, sometimes there are haters that pop up, and I don't really take that feedback as seriously. But when someone who has been in the community from the early days speaks up and says, "Hey, Ian, I don't like the way things are going, the way that you are approaching Patreon," I take that very seriously. And so that was kind of factor number one, is I want this community to stay intact. I want to have the best dividend investing community on YouTube. This is dividend investing for everyone. This is about empowering everyone in the community. And if there are members of the community that, for whatever reason, don't feel good about Patreon, surely that is a factor that I take into consideration. Now, the other factor, quite frankly, is time management. Since signing up for Patreon, I have found that I just don't have the time to juggle everything. I have 2 young kids, I'm married, so I got the family life, I have a very demanding full-time job, and I got my athletic stuff. I like to swim and run, and fitness is a big goal of mine, and I got YouTube and dividend investing, and so very busy life. And what I found is I really enjoy producing these videos. I love it. That's what I want to do. And I really actually enjoy writing too, but I want to have my writing come through the outlet of a book. And so there just is not room in my schedule for Patreon at this point. Unfortunately, it was an interesting test. One of the reasons I was enticed to try it is I see a lot of other YouTubers doing it, and I thought that it would be an interesting idea to try it out. Going into it, I thought it was going to be a great hit and that I was going to really enjoy it. It turns out that at least at this time, Patreon is not going to be a part of the PPC brand and channel going forward, but I have nothing against Patreon. I think it's a really cool platform. It's a great platform. I really appreciate the people that stepped up, but really what it comes back to is community feedback and time management. So thank you everyone for bearing with that beta test there on Patreon. But what I do want to do is I want to share a silver lining with everyone. I am just going to share my complete stock portfolio. I'm going to do this within probably the next 2 weeks. I'm not even waiting for 25,000 subscribers anymore. I'm just going to get it out in the hands of everyone. And so I will have a video on that coming up very soon. And just stay tuned. It's going to be really cool. I'm going to share the portfolio. I'm going to share all the positions and the percentage allocation to each one so everyone can see that. Although if you've been watching my channel for a while, you already know all the positions. You might not know all the percentages, but you probably know most or all the positions. And so get ready. It's going to be a really, really fun video, and I'm glad to share that. And that's going to be really good. So moving on, some more updates, channel-related stuff. If you are part of my local Bay Area crew, and if you want to join, I'll link in the description below. I have an email list for it. I'm going to hold another meetup in Q1. We're going to do it in San Francisco. The last meetup was so amazing, so amazing. And look, we're heading into a new year, 2019, so it is such a good time to get hyped up, to meet, to talk about dividend stocks, to collaborate, to just share the good times. And so we're going to have fun. We're going to do this in San Francisco. More details forthcoming. If you want to join that, please be part of my email newsletter for Bay Area locals. And worth noting, I actually had some amazing subscribers that I now call personal friends drive up all the way from Los Angeles last time. So anyone in California, or if you're visiting California, everyone is invited to that meetup in Q1. And so on the email list, I will share dates with everyone really soon. So I want to just close out today. I want to wish everyone a happy holidays. We have really come a long way as a community this year. This has been an exciting year in 2018 for dividend investing. I think 2019 is going to be a crazy year. It's going to be a wild year. It's going to be a little bit scary, but so exciting from the standpoint of investing for cash flow, passive income through dividends. I'll tell you, I wouldn't want to be investing or entering 2019 with any other investment strategy than dividends, because I think a lot of investors, they're going to see portfolio values probably dropping throughout 2019, but I could be completely wrong. And so I want to just wish you Merry Christmas, Happy Holidays, Happy New Year. I love you guys. You guys are the best. This is the best community. And also just stay tuned. My next video coming out soon. Some of you guys have been asking for a really long time, Ian, how do you analyze bank stocks? Which bank stocks do you own? What do you think about bank stocks? I'm going to share my framework with how I personally analyze bank stocks. By the way, I just bought some more of one of the bank stocks I own, Bank of Hawaii, ticker symbol BOH. Bought a really small amount, but I bought some more. And bank stocks are real interesting here. They're under a lot of pressure. And so I like those kind of opportunities to just dabble in, get a little bit more allocation towards bank stocks when they're not doing well. So before I leave today, in terms of a full disclosure, I own the stocks mentioned today. I am long. I own General Mills, ticker symbol GIS, Apple, ticker symbol AAPL, Bank of Hawaii, ticker symbol BOH, Johnson & Johnson, ticker symbol JNJ, Home Depot, ticker symbol HD, and Clorox, ticker symbol CLX. I own all of those stocks in my personal dividend stock portfolio. Hey, you want to see more updates, by the way? I'll link in the description below. Check me out on Instagram. I always share some cool stuff in my Instagram stories about the dividend stocks that I own. So a lot of fun stuff going on there as well. Before I leave today, as I mentioned earlier in today's video, it is very important that everyone understand today's video is not investment advice. I'm not a licensed investment advisor. Today's video is just for your fun and entertainment. If you're going to go out and invest money in the stock market, please consult a licensed financial advisor first. Investing in the stock market carries risk, and I'm literally just sharing my personal journey here on YouTube for fun and entertainment. Hey everyone, I will see you in the next dividend investing video.